kickstart taking all of your stock related queries. But before we do that, the number that you can write to us at is going to be flashing. There you have it on your screens, as well as the top of your screens. Do remember to mention the buy price for the stocks that you're already invested in, and for the ones that you hope to be investing in, mention the time horizon that you have in mind so that we can help you better. And speaking of helping you better with your stock related queries, let's kickstart the show. Start taking your stock related queries. Today on the show, of course, we have Akshay Bhagwat, who's the Senior Vice President, Derivatives Research at GM Financial Services, joining us. Akshay, thank you so much for taking time out and joining us, and a very good morning to you and a very happy Holi indeed. But well, let's kickstart the show. Start taking the first query that we're getting from Bharatwaj, in fact, from Coimbatore, writing to us about Exide Industries, 790 shares. Buy price is 430 rupees. Wants to know if he can add to these positions for the next 3 to 5 years. What do you have in mind?
So first of all, good morning and happy Holi to Team ET Now and all the viewers. For Exide Industries, well, it's been a one-way fall with the rough patch of the market, one-way fall from 580 to 339 where it trades right now. I feel there's a strong technical support around the levels of 300 to 310 zone, and in all likelihood, the stock should test those levels. So some further more pain left of 30-40 odd points. So if you are keen on averaging the stock from where you can expect a trading recovery, that is the level of 300 to 310. So buy on dips is what the advice is for Exide Industries.
All right. Hi, Akshay. This is Ankita also joining in. Happy Holi to you. And let's take the next question then. It's coming from Ravi Chandra from Hyderabad, who says that he owns UPL. He has a put option. Okay, so this one's for the technicals. But let's move on to the next query, and we'll take this question up later. So this one's on ABB India and PB Fintech and HUL. Wants to know your long-term view on this, and is this the right time to get into these counters?
So first of all, ABB India, yes, from the long-term view, the price structure is very strong. It is just that maybe if you were to micro time it, it is a bit overbought. From a longer-term view, the projection for targets right now is working at around 36,000. So the suggestion is to hold. I'm sorry, this is for ABB India, so my bad. 5217 is where it trades right now. It's been in a corrective phase, and I think somewhere around 4500, 4700 is where you should see some pullback in the stock. So some more pain left to go, but from a longer term perspective, expecting a pullback rally from levels of 4500. So the suggestion is hold. But at bounce of around 7,000 odd levels, you should take an exit. This should happen within a time frame of 1 year plus.
That's a take coming in as far as ABB India then is concerned. Akshay, I'll come to you with the next one because NTPC and Tata Power is something that a senior citizen Ekambaraya from Hyderabad is looking at. Now he wants to know about both of these stocks. 200 shares at 400 for NTPC, and when you take a look at Tata Power as well, 200 shares at a buy price of 428 rupees. Wants to know if he should be staying invested at this point or if he should be switching to any other stocks. And the time span that he's actually looking at is 2 years. What do you have in mind when it comes to both of these counters?
So yes, the power stocks have taken some beating recently, but overall as a sector, I believe from a longer term investment perspective, it's prudent to be invested in these two names which you suggested. If technically I were to compare which one is stronger, I believe NTPC is the stronger name. At levels of 333, there is a clear support in the making at levels of 300. And from a longer term perspective, this is a hold as it trades right now, and expecting levels of 400 plus to be revisited in a time horizon of 1 year plus. Tata Power might be a slow mover, but from an investment perspective, really, I think you need to hold on to the stock. The support is slightly lower, 320 can be the dip going ahead in down maybe 2-3 months down the line, but from a longer term investment horizon, definitely it's a hold in the power sector space.
All right, Akshay, so that's the word coming in on NTPC. But moving on to another counter now, this is Gautam Bhala who's writing from Mumbai. He says he's got 1 lakh shares of Indian Hotels, and he bought this at a cost price of 65 rupees. He wants to know whether he should sell half of it or hold it for a target price of 1,024 rupees.
So first of all, 65 is a very strong entry point which the viewer has got, and congratulations for buying the share at such underpriced levels. At 762, you are sitting on on significant wealth, and I think the stock has corrected very comparative to the markets and other stocks in to the peers. This stock has not corrected much, so there is a strength in the price structure. The suggestion is to trail your stop losses. So by chance going ahead, this stock were to break the levels of 700, you need to take off some profits off the table, half the quantity. As it stands currently, there is a good probability that this stock should revisit levels of 850 to 875. That is the point where you should book half of your quantity in Indian hotels. The remainder you can keep it from a long-term investment, considering the buying price at which you have.
That's a take coming in. As far as Indian hotels then is concerned, the next one that we have is coming in from Radha Krishna, writing to us from Bengaluru, wants to know about BSE. 20 shares, buy price is 4,700 rupees. What do you make of this one? Because the time horizon that Radha Krishna has in mind is just about a year.
Uh, well, from a yearly perspective, it's going to take some time for the stock to recover. The stock has seen a bearish development from midterm. Once it has broken the level of 5,000, it was more of a triple top bearish breakdown on the technical charts. At current levels, it is oversold. Expect a trading bounce till around 4,500, 4,700. It should happen within a couple of months. That is the point where you need to take an exit from this stock if your time horizon is under an year.
All right, moving on to the next question. Then this is Sandeep, who's writing from Noida. He says he holds 500 shares of Motherson Wiring at rupees 20. That's his buying price. What is the long-term view on that, and can one add more at 50? Akshay?
I think from long term, really the listing levels are being retested, and again. If you see the stock somewhere listed in 2022-23, I think 40-45 was the price post listing. It did make a strong gain till 75, but somewhere again and again the stock is dipping back to the levels of 45. So technically there is not a clear strong trend in place. It is just that the support of 44-45 is holding on. So the suggestion is keep a strict stop loss of 40 on this trade, and on a rebound back again till levels of 64-65, which if it does should happen within a 3 to 5 months time frame. Look for an exit in the stock.
That's a take coming in as far as Motherson Wiring then is concerned. But time for a very quick breather on the show. When we come back, we'll continue taking all of your stock related queries, so don't go anywhere.
Welcome back here to into Buy and Sell Now, where we are taking all your questions and getting them answered by the experts. You can start writing into us, and the number is flashing on top of your screen. You can send in your questions, and we will get them answered by our experts. And now we are joined by Osho Krishan, Senior Analyst, Technical and Derivatives Research, Angel One, joining us. Hi, Osho. Thank you so much, and wishing you a very happy Holi.
Very good morning. Thank you for inviting me, and firstly, wish all of you a very happy Holi. And I wish this year our portfolio becomes more greener.
Absolutely. Here's hoping, especially in this volatile market, here's hoping we see a shade of green across our portfolios now. But Osho, let me come to you and let me get a question answered from you. So this person wants to know, they have not written the name, but they want to know if this is the right time to enter Zomato. Is this right time to enter Zomato? Because I think Zomato has corrected quite a bit now, and do you think this is a good entry level for anyone who wants to stay invested for the longer period?
See, overall, from a technical standpoint, the counter have corrected or have taken the target on the breakdown that we have seen from the zone of nearly 240. So I'm expecting the zone of 200 or 195 should provide a very strong cushion to this counter. So definitely one should start accumulating this stock for a short to medium term perspective from an investment point of view, but in a staggered manner. One should not pledge whole capital in this counter at current levels, but definitely a accumulation zone for Zomato at current levels. I'm expecting that once there will be a kind of a reversal that can be seen, then we can see from a medium term perspective a decent returns in this share price. So definitely a buy, but in a staggered manner.
And a staggered buy, that's a recommendation coming in as far as Zomato is concerned. But the next one that we actually have is coming in from Vijay, who's writing to us about a couple of counters, couple of banking names at this point. Now, this is a pack that we've seen a lot of volatility emergent, but we do have him writing about Equitas Small Finance Bank. 358 shares, buy price is 90 rupees. And Akshay, when you take a look at Karnataka Bank as well, he's talking about 68 shares that he's holding on to. Buy price is 217 rupees. He's mentioned that he's sitting at a loss. He wants to know if he should be booking losses, looking at some other counters from within this pack, say a Bank of Baroda or Canara Bank.
So first of all, for Equitas Bank, the technical structure looks weak. It's been a one-way fall from levels of 110 in the last, I think, 5-6 months. And looking at the technical structure, there are no indications that it stops here. So the support zone is pretty deep. It's around 40 where it stands as of now from a positional perspective. That's the downside you can expect going ahead. So the suggestion is to take an exit in Equitas Bank. And as far as Karnataka Bank goes, you have the similar price structure in Karnataka Bank where it's been kind of trading in the red. But here the price structure is now getting closer to a massive support zone, which is around levels of 160. So you can expect a strong recovery. Technically, from a longer term perspective, this still is positive. It's buy on dips. So the suggestion is to hold Karnataka Bank. In all likelihood, it should bounce from the current levels and revisit levels of 250, 260 from a longer term perspective. So exit Equitas, hold Karnataka Bank. If you are open to averaging or adding more, Karnataka Bank still is a good option.
All right, moving on, and I'll come to you, Osho. Another set of banking names. This is a person writing from Gurugram. They have not written their name, but they want an advice on DCB Bank and Yes Bank for a 6-month time horizon. And these stocks were purchased last year. Is it, are these stocks good bet for the next 6 months, Osho?
For DCB Bank, then this counter has been into a very strong consolidation around the zone of, on the lower front, the support zone stands around the zone of 100, while on the higher end, near about 140 is a resistance zone. So I'm expecting that it is expected to hover in between the consolidation zone until we see a strong breakthrough. So on the lower end, near to the zone of 100 is a very strong support. So one can definitely hold with a stop loss of nearly 95 to 94 from a short to medium term perspective. While on the higher end, one can expect a very strong movement once it crosses the zone of 140 from a positional point of view. So from here onwards, 140 is again nearly 40%. So one can definitely stay invested in this counter. Now coming to Yes Bank, then this counter has not been that fascinating in the recent period. The counter has been into a deep correction from the zone of 26, 27 odd levels. But looking at the overall historical trend, this counter have a tendency to take a support around the zone of 13 to 12 rupees. So I'm expecting that once it sustains or once it stabilizes near the zone of 13, then it will provide an opportunity to invest from a short to medium term perspective. I'm not having a very strong or aggressive target in Yes Bank, but I expect that there can be a pullback that can be seen from a medium term perspective. So 13 is a support zone, and on the higher end, 22 followed by 26 can be seen as a target from medium to long term perspective.
Alright, then that's a take coming in. As far as some of those banking counters are concerned, tell you what, let's take a breather from looking at the banking pack. We do have some more queries pouring in as far as that particular pack is concerned. But for now, let's take the next query that is coming in on Chambal Fertilizers. Now, this person's not written their name, but they want to know for the next 2 years what you have in mind when it comes to this one, Akshay, because he wants to know if he should be investing in this particular counter and if there's any entry price, entry levels that you're keeping in mind as well.
Well, from a price chart reading, I think this is a very strong chart. It's just that the last 6 to 7 months has been confined in the range. My sense is looking at the price and the volume structure, it's more of an accumulation phase. This price structure already has given you a strong breakout at the levels of 460. This we saw at the beginning of the year. It is gradually moving up. So yes, be invested. If you plan to average it 560 where it currently trades, till dip of 520 is the level where you can keep on averaging. Longer term perspective, I am looking at price targets of around 675 to 700. And as a risk management perspective, you need to keep a stop loss below 440.
All right, that's the view coming in on Chambal Fertilizers. But Osho, back to you then. Now, this is Venkat Ramani, who's writing from Bangalore. This person holds 160 shares of GMR Airport, which was bought at 84 rupees per share. They want advice whether to hold it, add more, or this is the time to sell GMR Airports. This is for a period of 15 months that they're looking at, and so they want advice to whether hold this the stock or add more to it.
See, overall, GMR Airport has been into a corrective phase, but in the recent period, there is a kind of a divergence that can be seen from the price action and the technical indicator front. So one can definitely stay invested because this is an early sign of revival or a pullback in this counter. So I expect that in the coming period, there is a possibility of a very strong pullback once it breaches the zone of 78 on a decisive manner. So one should stay invested in this counter. If there will be any kind of surgeons towards the zone of 78, then even one can add more for a higher perspective of nearly 88 in the short term perspective. But once it breaches the zone of 88, then one can definitely eye for 100 kind of a zone from a longer term perspective. But these are the levels that one can definitely expect a breakthrough: 78, 88, and then 100.
That's the take coming in as far as GMR Airports is concerned. Tell you what, I just wanted to quickly mark before we move on to the next query that the number that you can write to us is flashing on the top of your screens. Do remember, viewers, to mention the quantity that you're holding on to as well, in addition to your buy price as well. But with that, let's take the next query. Then the next one that we actually have is coming in from Jay Krishan, who's writing to us from Kerala. There you have the number on your screens as well. But Dixon Tech is the one that he's looking at, Akshay. He's not mentioned the quantity, but he's mentioned the buy price. And he wants to know for the medium term what you have in mind for this particular counter. Now, when I'm looking at the charts as far as Dixon Tech is concerned, in terms of the last 3 months, it's not been much of a move. It's been a downtick for sure. But then when you take a look at Dixon Tech, 16,331 rupees for the medium term, that's his investment. What do you have in mind?
Rightly mentioned, the last 3 months has been a pain point for this stock. The strong uptrend which this stock was in since 2023 has finally seen major profit booking from levels of 19,000. So in all likelihood, at the levels of 13,000, you can anticipate a trading pullback. Since the viewer is more looking from a medium-term horizon, 3 to 6 months, the advice is to exit on rallies. Now, these rallies can be around 15,000 to 15,500. That's the recovery rally you can expect in Dixon Tech from roughly around 12,500 to 13,000 zone. So exit at higher levels is what I would recommend in Dixon Technologies.
All right, moving on from that's the view coming in on Dixon Technologies. But I'll come to you then, Osho. Rajpreet Singh is writing from Ludhiana. He holds 100 shares of Jio Financial Services at a rate of 325 rupees. That is the rate he has bought at. He wants to know about the view on Jio Financial Services. How does that look to you on the charts?
There is no change in the point of view that the counter has been into a very steep correction. There has been no breather or respite that was seen in this counter. But at current levels, one should not be very much in panic or maintain caution, because I'm expecting in the coming period there is a possibility of revival in this counters. But on the higher end, again, 280 to 300 is the immediate resistance for this counter. But at current levels, one should not exit the counter. One should stay invested and can expect a decent rally towards the zone of 280 to 300. Again, we need to review once the counter reaches the zone of 300 that whether it has the potential to even surge higher or one should exit from those levels.
Patience is key when it comes to Jio Financial Services. Stay invested and good returns are on the cards as far as that particular counter is concerned. But time for a very quick breather on the show. When we come back, we'll continue taking all of your stock related queries. So don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock related queries. The next one that we actually have, Akshay, is coming in from an investor who's not mentioned his name, but wants to know, he's a long-term investor, wants to know if there's any stocks that you had in mind when it comes to specialty chemicals in that entire pack. Is there any investment idea that you had in mind?
Well, from the specialty chemical space, if I were to look from the technical perspective, it has to be SRF. Now, the reason is that if you look at the price structure, this stock had been in a range, I think since last 3 years, it had been in a range from 2100 to 2700. And a couple of months back, we had a strong technical breakout with strong volumes at the levels of 2700, which just puts it on a very strong footing, promising us targets of 3300 to 3500. So that's a very strong technical structure. You can look at SRF. From an investment perspective, stop loss should be 2500 and 3300 to 3400 is what you can look forward to with a time horizon of 1 year plus.
All right, moving on from the specialty chemical space, Osho, I'll ask you. So this one again, it's from Anshul from Pune, and this is they want to know about some shares with long-term time horizon, and they have a lump sum investment of around 2 odd lakhs. That's their option. So for 2 odd lakhs, what would be a good bet in for, say for a time period of 2 years?
See, at current market levels, there are many counters, many strong heavyweight counters which are looking very positive for investment. Firstly, Reliance being the most heavyweight, and at this price level, that looks very lucrative. So one can definitely put Reliance in their portfolio. Other than Reliance, banking sector, Axis Bank and ICICI Bank are looking very positive at current levels. So one can even add from banking these counters. And from auto space, Ashok Leyland, Tata Motors, these two counters definitely can be seen in a portfolio. So all these counters, one can invest and diversify their portfolio so that from a future perspective, they can have a proper diversification and can have a decent.
Then that's a take coming in as far as some of those counters are concerned. But Akshay, since Osho mentioned Axis Bank, I wanted to take the next query coming in for a 3-year perspective, coming in from Jaydev Appa, who's writing to us about Axis Bank, 200 shares. Buy price that he's mentioned is 1,150 rupees. What do you have in mind when it comes to Axis Bank?
So Axis Bank, I believe, it's in a corrective phase. Whether the bottom is 1,950 zone from where it is kind of holding on since the last couple of months, or still there is some more pain to go, that's a question mark for me. But since your investment horizon of the viewer is around 3 years, then definitely you need to start buying. But the advice is not to put the entire money at one go. You need to average this out, and the range for averaging is from current levels 1,000 till the levels of 850. So the pain which I'm talking about might be limited for the next 2 to 3 months, but overall this dip should be bought into, and from a longer term horizon, this buying should be rewarding for you.
All right, moving on then. I'll come to you, Osho. This is Balaji, who's writing from Chennai. Wants to know, he holds 200 shares of BPCL at the price of 285 rupees. Wants to know if he should add more at the current levels or just hold on to it for another 1 year.
Overall, this counter has gained some kind of traction in the last one trading week. There has been a revival from the zone of 240 and is now hovering around 260. So I expect that there is a possibility of a strong pullback in the coming period. So one can stay invested in this counter. No need to add at current levels, because if there won't be any sustainable or a sustainable move on the higher end, then the person might get trapped at current levels. So better to stay invested with the amount that has been invested. And in the coming period, I expect that the zone of 285 to 90 can be easily retested in BPCL. And once it breaches the zone of 290, then only we can see some kind of positive traction for the coming.
That's a take coming in as far as BPCL then is concerned. The next one that we actually have is coming in from Shanmuga Sundaram, who's writing to us from Coimbatore. Akshay wants to know about Titan. 40 shares at a buy price of 3,200 rupees. Now, when I'm looking at the charts of Titan, you do have on a 3-month, 6-month basis, even on a year-to-date basis, there you have it on your screens. You do have a tinge of red coming in on all of these charts that I mentioned. What do you have in mind when it comes to Titan then?
For Titan, if I look at the longer term charts, since the viewer is keen on the longer term perspective, one thing is clear that it's in more of a time correction or a consolidative phase. Lower lows are being made, but somewhere there is demand coming in. So I believe on the weekly charts, there is a 200-day moving average on the technical price chart, which works around 2,800. So the worst case, that's the lower point the stock can lead to. Overall, I'm expecting the levels of 2,800 to 2,900 to act as a support from a longer term perspective, and that's the point where you can anticipate a bounce back scenario. So yes, if you are invested, continue to hold, open to be averaging on dips around 2,900, and from a longer term you can expect this stock to revisit levels of 3,600 plus.
All right, so that's the view coming in on Titan. But Osho, I'll come to you. This one's another big name, ITC. Subrata has writing from Kolkata. So Subrata holds ITC at 445 rupees. That's the buying price, and they would hold it for the next 1 year. Is it right time to average in with a time horizon of 1 year?
PC has seen a historical consolidation around the zone of 400. So I'm expecting that these levels tend to provide very strong cushioning to this counter and can provide a very strong pullback also. So definitely one can accumulate at current levels. In the coming period, one can expect a target of nearly 450 to 460 kind of a zone. But overall, being a low beta counter, I'm not expecting that there can be a very strong momentum coming in this counter. But overall, these levels are very strong support zones for this counter. So one can definitely add from a medium to long term perspective for an immediate target of 450. Once it breaches the zone of 450 on a closing and sustainable basis, then we can see further upside movement in the coming.
That's a take coming in as far as ITC then is concerned. Akshay, the next one that we have is coming in from Tina Kapoor, who's writing to us from the National Capital, wants to know about Varun Beverages. Now, her buy price was for 40 shares, it was 545 rupees. The stock has not had a good year thus far. What do you have in mind when it comes to Varun Beverages?
Beverages, on the technical price chart, the development is that we had a breakdown of a major support zone, which was seen around 550. This happened a couple of weeks back. So that's a bearish development from a medium term perspective. So in all probabilities, although the stock is recovering lately, there should be selling or profit booking or exits once it again retests near the resistance zone of 525 odd zone. So from a medium term perspective, my advice is to take an exit on a slight recovery near 525.
All right, on that note, I'd like to thank Akshay and Osho, both of you. Thank you so much for taking the time out and joining us today. But viewers, with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back after the break.
If you like this video, then like, share and subscribe to ET Now.